Hello, Leo. Welcome. I am so excited for this conversation. Thanks for joining us.
Thanks for having me. I'm excited as well.
Yeah, so we're going to jump right in. Can you tell us what is Susa Ventures investment thesis? What do you guys focus on?
Sure. We're a $125 million seed stage fund. And so usually we'll write checks that are 1 to 2 million at seed stage or pre-seed. We're typically leading or co-leading rounds. And the one thing we really like to see is companies that have good defensibility over time. So ideally, they could build a good moat around their data, their network effects, things like that. So that's kind of the broad thesis. And then the 4 categories you spend the most time in are B2B SaaS, healthcare, logistics, and fintech. And so 90-ish, 95% of our investments are one of those 4 categories.
Mm-hmm. And you also have is it a sister fund or a sub fund called Hamba? And that is more in deep tech. Can you tell us about that one?
Yeah. So Hamba Ventures it's a smaller, newer fund in the Susa family. So we have 3 funds now. This Hamba, Susa, and then we have a growth fund that is, I'm not going to spoil their name, but they have a new name. They're going to rebrand it in the near future.
Oh, man.
Hamba Ventures is focused, instead of lead checks in those 4 categories I mentioned, it's focused more on kind of smaller supportive checks in emerging and frontier tech sectors. And so the things it focuses on are like climate and energy, robotics manufacturing, defense and security, stuff like that. That's been pretty fun to look at for the last couple of years.
That's fascinating stuff. And you're lead on that fund, right?
Yeah.
Very cool. What's your specific thesis? Are you more of a kind of conviction investor? Do you look at fundamentals really carefully when you're deciding to invest?
It really varies based on, I think probably like valuation, round size are the thing that impacts this the most. Because there's kind of this joke in investing where like there's a fair price for anything, right? So like, if it's a pre-seed and, if it's a really low price pre-seed, maybe it's not like a 4 post or something or 5 posts, you're just looking at the founder, and an idea, like you don't need anything built, you don't need traction. If somebody's trying to raise like a $6 million seed round and they're really hoping for a price that maybe is approaching a Series A, you tend to look more for like what's the traction, the retention, the engagement, kind of some of the hard numbers. And obviously there's some exceptions there, right? So like, if Elon Musk approached us for some reason and said, hey, I'm raising a seed round, like, with just an idea, like I'm sure we do it at a high price and that's fine. But generally the higher the price, the more rigorous we tend to be on traction, things like that. And the lower the price, the more we're looking at like the founder, the idea, the market, kind of the soft intangibles of a company.
Interesting. So it has more to do with price than stage, although they do somewhat go hand in hand.
It's a little bit awkward because these days, like the nomenclature is kind of divorced from the pricing sometimes. So sometimes, you'll have a company that says, oh, we're raising like a $10 million seed round, which is really maybe more like a Series A, but they're calling it a seed round. Sometimes it's a $2 million seed round. Sometimes it's a $3 million pre-seed. And so it really just depends on like how the founder's calling it. But for us, it's more about like, where do we think the valuation will land when all is said and done?
Yeah, I just saw the other day on Twitter, someone had reposted a image of a blank check they received from Paul Graham from like 15, 18 years ago. And I'm not sure if it was intentionally a blank check, as in like, take my money, I'll invest in whatever you're doing, or if it was an accident. I didn't get to the bottom of that. I forgot who that was. Yeah. So tell us about your road into venture. You started out as an engineer, and I'd love to learn about your background.
Yeah. To be honest, it wasn't something I'd really anticipated. So I kind of lucked into it. So my background is I spent about a decade as an engineer, and I was pretty fortunate. I worked at 2 startups when they were pretty small. The first one was LinkedIn. So I joined when it was about a dozen people almost 20 years ago, and worked there for a couple of years, basically during the Series A phase. Then I worked at Google for a few years on their payments product. And then I missed startup. So I went to another startup called Factual and worked there for about 4 years. And that was roughly the same stage as LinkedIn. So it was, I think, 15, 16 people when I joined, something like that. And about 60, 70 when I left. And so I like that Series A stage a lot. I like startups a lot. I like that, kind of how quickly they build, how quickly you could see the impact you were having. And so I was interested in starting my own company after my time at Factual. But I felt like I kept seeing the Series A phase that I'd never seen seed stage. Or pre-seed, or like, what is it like when it's just, 2 founders in a garage? And so I wanted to learn more about that. And one of my teammates from Factual actually approached me right around when I was leaving. And they said like, well, I'm about to leave too. I've been angel investing with some friends. We're thinking of maybe starting a seed fund down the line. And we're all come from the business side. And we want an engineer on the team to help do like tech diligence and evaluate the technical founders and CTOs and things like that. And so my friend invited me to join as like an angel in this group. And I thought, oh, this is great. Like, I'll spend, 6 months or 12 months doing this. Maybe I'll like it. But really what I want to do is meet a lot of early stage founders where it's like 2, 3, 5 people at the company. It's super early, and, understand how do investors think about those companies, understand, how pitches work, understand like what are the challenges, and like, what are the strengths required to build a company in those early days. And then I go start my own company. And so I thought I'd do this for a year or two, and it's like 10 and a half years later, and I ended up really liking the job. And so here I am.
You ever get the itch to maybe go back to the other side of the table and start something?
I did in the first couple of years. I would say I've been kind of surprised by this, but a venture fund it's not quite like a startup, but maybe it's like a third of a startup, right? Because you're still over time building a team, you're managing people and mentoring people. You're trying to think about like, well, what's our product? What's our messaging? Like, what's our marketing? So it's not, it's not quite the same as like launching like, a tech company, but it has some of the elements. And so I think that's definitely scratched my itch over time.
Got it. So as an engineer, what skills which skills as an engineer translate really well into making you a great venture investor? And are there any habits or learnings that you developed as an engineer that maybe you had to unlearn to be better as an investor?
It's a good question. I think the skill that's probably been most useful is like kind of being a little more data driven and analytical and like methodical in how I evaluate things. I think engineers are sort of like notoriously skeptical. Like you're not going to sell to them by just being like, oh, like this, this other company uses this product, you should use it too. They're going to say like, okay, I want to evaluate it and try it and like, look for the corner cases and stuff like that. And I'm very much like that when it comes to, both evaluating companies to invest in and then working with them afterwards. And so I think that's been a good skill. I think on the flip side, the thing I had to unlearn a little bit is like, as an engineer, or at least for me, like I never really thought about the business side that much for most companies I was at. So I didn't think about like pricing or sales or marketing or any of that stuff. It was more like, oh, the product is like, this is a fun, technical challenge to work on, or like, the team is really smart on the engineering side. And those are the things I really valued. And I think what I learned really quickly, like within just months of starting to invest, is like, I'd look at the product and I'd come to my partners and I'd be like, hey, this product looks awesome. Like, you should invest in it. And they would just be like, well, like the pricing doesn't work. Like they're not going to make any money, or, or they're competing with these like 8 other companies that are all much better on these dimensions. And so, I basically like was not looking at anything besides the product and engineering side. And within a few months, I realized like, well, that's like a factor in success, but it's often not even the biggest factor. Like the biggest factor might be like, what are you actually building? Because if you build the right thing and decently, it's better than building the wrong thing perfectly, right? Or like another factor might be like, can you actually sell it and find customers, or do they really want what you're selling? And again, like the perfect thing that nobody wants is going to be like a less successful company than something pretty good that like, there's no alternatives. People really need that solution. So I just learned to start more holistically, but it took a few months to kind of unlearn the engineering and product bias that I had.
Yeah, it's a really good point that we all look at things through our specific bias, and in order to be to have a full perspective, you got to take that lens along with everything else and create a fuller picture.
100%.
Does your engineering background help you with some of the deep tech investments that you're making specifically with Hamba, or is that just kind of an aside?
A little bit. I mean, I would say like this has been a pattern over the last 10 years. I think where the background helps you the most is like rapport with technical founders, right? Because I think the way they do, I analyze things the way they do, but maybe I have kind of like a different training set because instead of spending a lot of time on one company, I've spent a little bit of time with like a couple hundred companies now over the last decade. And so I think a lot of like technical founders like the way I think, they like the way I view problems or present potential solutions. I think generally they don't want my technical help because I'm pretty rusty these days. And also like, even if I wasn't, I think it takes a lot of context building to be able to really help on something technically, right? Like I can't just swoop in and be like, oh, you should use MongoDB. It's like, I have to actually look at the like software for a while, talk to the engineers. And then maybe after like a week or two, I can say like, hey, you should use MongoDB, but that's not a good use of anyone's time. But I would say like on the Hamba side, when we're looking at things like robotics or energy, most of the time on the technical diligence, I'll end up like trying to find an expert in my network that can help. Because the truth is like, if I can evaluate it technically, it's probably not that sophisticated. But if it is that sophisticated, I'm not the right person to evaluate it. right?
Yeah.
So like, I'll give you one example. Like in the early days of SUSE, we invested in Rigetti, which was a quantum computing company. And that was one where like, even though I'm technical, like I don't know jack about, Rigetti or about quantum computing. Well, I didn't at the time. But we had somebody in our network, like it was actually a founder that we were working with at the time, where they had like a quantum physics PhD from Caltech. And so, we got them on the phone with the founder. We asked them what they thought. We asked them about the pros and cons. And that was the thing that got us comfortable on the technical side.
Yeah, that makes a lot of sense. And I'm glad you brought up the example from Rigetti. I'm fascinated by quantum computing. It's something that we've been hearing about for a while, though, among other things that we've been promised that are always just past the horizon. Where are we with quantum? Is that making its way into commercial use in the near future? What are you seeing?
Honestly, I'm still very much a layperson here, but I think it hasn't quite, crossed that gap of like getting to a place where you can be adopted for like large real world problems. So I think it's still more like a proof of concept phase, and the proofs of concept are getting more and more sophisticated and like substantial. But it's still not quite ready for like large applications, from what I can tell.
Yeah. Seems like it, but it could be a game changer among other technologies that are, causing a lot of shift right now, specifically AI. So let's talk about that for a bit. You mentioned copying the others or thinking for yourself and in your investment strategy, whether you look at things based on trend or momentum. How do you think about that? Recently we had the big crypto and Web 3.0 kind of fad, and it's died out. And obviously now with generative AI, that's all anybody's talking about. Mm-hmm. How do you separate the wheat from the chaff in that kind of context?
It's been interesting. I would say like maybe zooming out for a second, after a decade of investing, I've definitely seen a number of trends come and go. I think like shared economy and like Uber for everything was one, chatbots was another. I think crypto's had like 2 or 3 waves now. Like there was ICOs like 5-6 years ago. There's all the DeFi stuff last year and the last couple of years. And sometimes the trends stay. Like I think the generative AI trend is here to stay. Sometimes they kind of wax and wane or they just disappear. So I think what I would say like the first time I saw a trend, I think maybe it was chatbots in like 2015 or something like that, like a couple of years into my investing career. There's definitely a little bit of feeling of like, hey, if we don't make a bet here, like we're stupid or we're missing out. And then, I think we actually didn't make a bet there. And then within a couple of years, we're like, oh, we actually, it wasn't that bad to not invest here because it turned out, a few companies were successful, but most of them didn't really pan out. And so I think that experience and a few others like it over the years have taught me that like, it's okay to sit out fads, right? And so you do want to be really like kind of critical and self-aware or like aware of of the trend and actually understand like, is this just hot because it's hot, or it's like, it hits some zeitgeist, nerve, or is it hot because like, hey, it's a real fundamental like innovation or paradigm shift or something like that. And on that metric, I do think the AI stuff is like more in that second bucket. Because I think the applications we're seeing people come up with, like, they're rough, like there's hallucination on AI, or like sometimes it makes stuff up, sometimes it's wrong, it's hard to tell. But like, there's still so much value created there, right? Like when you look at something like Jasper, it creates a blog post. Maybe you have to edit it a little bit, but you just took like a 5-hour task and made it like a 20-minute task. And it's not zero, but like 20 minutes is a lot better than 5 hours. So I think for me, what really matters is like, is there value being created? And I think on the AI side, like that definitely feels like the case.
Yeah, it's mind-boggling how quickly things are advancing there. And this morning I was playing with Pi. Have you seen that one yet? It just came out yesterday. It's a chatbot from Inflection AI.
Yeah, it was like the Reid Hoffman company, I think, right?
Yeah.
I haven't checked it out yet, but I have it like an open tab this morning to check it out.
It's very reminiscent of the movie Her. It's scary but exciting. I'm very bullish on AI. Have you made any investments in generative AI, or I guess AI generally? I think you have in augmented analytics and things like that on the SaaS side, right?
Yeah, we've done a few. Most of these, actually, I think all of these are unannounced. So I can't name the companies, but I can kind of high level describe them. So one was like a marketing expert that built a huge marketing startup before. And they're applying generative AI basically to like conversational marketing. So, like kind of what you're saying with her, but less in terms of building a relationship and more like nurturing like a customer relationship and being like, hey, maybe we should try this discount or check out this product, but using all the like new modern like generative AI technologies that have been coming out.
If I guess who it is, will you nod your head or? I have a
share.
feeling. I have a feeling I know.
Can't share, unfortunately. But so that's one. Another one is using generative AI for protein design and synthesis. So I think there's like a lot of interesting applications here. But it is also like kind of a tough area because I think for a long time, like there were kind of inherent barriers to entry for any company where at a minimum, like, somebody wants to copy you, it'll take them 3 months, 6 months, whatever, to copy your product and kind of understand things. Now with like all the like OpenAI APIs and some of these other APIs, it's like you could make a copycat of something sometimes within days or even hours. And so you really need like an interesting perspective, like a proprietary data set, something else on top of the AI where you're not just like a thin wrapper on top of an AI API. You're actually doing something else that's valuable and will kind of compound its defensibility quickly.
Of course, and that goes back to what you said at the beginning about moats. How do you think about moats specifically in the context of AI startups?
Yeah, I think like most investors I've talked to, I'm still thinking through this. I would say the companies that are most interesting to me are the ones where, like I said, it's not just a wrapper on top of OpenAI, because I think those are the easiest to disrupt. I think it's the ones where either they have some interesting data set, maybe it's proprietary where like they have data nobody else has. Maybe it's more a matter of like they have public sources, but it takes a lot of time to like massage that data and make it usable, and they did that. And again, that's a good barrier to entry for other competitors. Or it's like it's an AI product, but there's something on the side like a collaboration suite, or like things that, for example, involve like multiple people, where it's not just the product itself. It's like it's a product plus a network plus maybe integrations or an app store. And again, those are things where even if somebody copies the AI piece, the other stuff still takes a long time to copy. The other stuff has network effect, so it's harder to actually catch up to somebody once they take off. So those are some of the things I've been looking for in AI startups.
Yeah. So you have data moats, you have distribution and network moats, but it remains to be seen whether or not there's real technology moats in AI with building the underlying models.
I think there might be with somebody like OpenAI, right? There, the moat is probably like the number of world-class, AI researchers is something, right? Maybe it's 200, maybe it's 2,000.
Talent moat, yeah.
If they have most of them, that's a good moat. But I would say most startups I've talked to on the generative AI side, they're not really innovating on the models themselves or the model architecture. It's really more about applying the current models, and maybe you're trying to innovate like the prompt engineering or the data that goes in, or how you massage the output, but you're not really innovating on the model itself.
Yeah, certainly. These startups that are popping up left and right, that are building on top of OpenAI, they're gonna have to answer the defensibility question, because it's so easy these days to build. You can stand up. We had on this on the podcast, we had founders from startup, Wizard, which is creating UI from AI, AnyWord and Ink, which is text and long form and short form text from AI. So you can put up a site, create all the content, create a prototype, create even the app itself and the code, all with generative AI. So it gets really, I guess the barrier to entry is much lower there. So what other effects do you see happening in startups, in business in general? And maybe if you want to kind of zoom out to society as a whole, not to get too far out, obviously nobody knows what the future brings, but maybe even in the 1 to 3 year horizon, how do you see things changing with AI?
Yeah, it's a good question. I've been thinking about this a lot. I don't know if I have like particularly smart answers, but it's definitely top of mind. I think one conclusion I've drawn is I think both for investors and for founders, like AI basically becomes like kind of an existential or like litmus test question for whatever a startup is working on. And specifically, I think the question to think about is something like, we have GPT-4 now. And if you extrapolate to, let's say, GPT-15 in like 6 years, like, is what you're building going to be strengthened by that? Or is it going to be like crushed by that? right? And I think there's a lot of companies, some starting today, some maybe that started like 4 years ago or 5 years ago before the AI stuff really like exploded, where they can be helped by AI. And like we have one company that's, I think they're Series C now, and they basically like doubled their revenue in like 6 months because they found like a great way to incorporate AI into their product, and they have a bunch of interesting data to support that. But there's other companies, like some that we work with, but a bunch that I've seen, where it feels like the opposite, where it's like, well, you're building and you have this great vision, but this vision feels like 5 years ago it was a winning strategy, but now it's clearly going to be replaced by AI at some point. And maybe it's in 1 year, maybe it's in 4 years, maybe it's in 7 years, but it's not 30, and it's probably like less than 5. And so I think that's like a key question to think about for startups and like for founders and investors is, how will like another 5x or 10x or 50x in AI capabilities affect what I'm building? Um, and then I think on the societal level, I do think it'll cause a lot of job shifts and displacement, which is honestly like a little bit scary to think about. Because historically, I'm actually not a big student of history, so I'm kind of like speculating, and maybe I'm wrong, but I feel like when we've had jobs evolve, like it's been kind of gradual, right? So, you have like horse and buggies and then cars come around, but it's not like, one day you go from like 5% of the population is like a horse and buggy driver to zero. It's more like it's gradual, it's over time. I think with AI, you're going to have a lot more rapid shifts, right? Where like, for example, if you had a really good AI SDR, maybe you go from having like there's 3 million SDRs this year to like there's a couple 100,000 in a year or two because AI has replaced a lot of it or something.
Yeah, I agree with you on the job loss and job displacement. The Industrial Revolution took about 100 years or so. With AI, it's every day things are changing quickly, and the economic effects aren't. We haven't even seen them begin really. So it's truly a game changer, I think. I saw yesterday Sarah Moskow posted really concise, good framework on thinking about this, because I was going to write that exact blog post. Startups and founders are asking, everybody's talking about AI, everybody's feeling that FOMO. Do I need to drop what I'm doing and just think about AI as a founder? And she outlined it in 3 buckets. So the first is, what can AI do to improve the operational efficiency of your business? So throughout the business, you mentioned marketing, sales, operations, anything that currently you're spending human capital to do, can you make it more efficient? Can you create more leverage with AI? So that's the first category. The second is in your product. Can you improve your product by leveraging AI? Not every startup needs to become an AI startup, but a lot of products can become better through implementing an AI component, whether it's generative AI or otherwise. And then the third is what you're talking about, which is category shift, right? How is AI going to completely disrupt your category? Potentially, for example, just had an episode with Adrian Schwager, the founder of Growth Assistant, which is offshore outsourced talent. And, I think that they do great work, but in my mind, it's really like, if it's something that could be delegated offshore, it's very quickly going to be easily delegated to AI, in my opinion. Maybe not in the very short term, but that seems like the next logical leap. So that's kind of like more of a industry shift type way of thinking about it.
Yeah, and I think to your point about the Industrial Revolution taking like 100 years, I think even for any technology, like if it involves the physical world, it takes a while for it to get adopted. Right? Like even if Google released its self-driving car tomorrow and it was 100% production ready, it's not like all existing cars would go away, right? It's like every year some small percentage of cars gets replaced, and in like 30 years, everything's self-driving. But there's going to be a long transition period. When it's AI and it's purely digital, like that transition period could be a year or like a few months or something like that, if it makes economic sense.
Yeah.
So yeah, it's definitely it's kind of a wild time to both be an investor, but also just to be alive. Because I think for consumers and just like for economies in general, I think there's going to be a lot of disruption, but in general, like there'll be kind of pain along the way. But I think it's going to be like kind of a 10x economy over 10 or 30 years or something like that. And like all the consumers, I think, will be much better off as a result.
I think that we can use it for the greater good and enter an age of abundance, but it's going to take some thoughtful, conscious, intentional moving in a specific direction by companies, societies, governments, it has the potential to go in an opposite direction as well. To your point about bits moving faster than atoms, it's a good transition because I wanted to ask you about Ryan Peterson from Flexport, wildly successful startup that completely changed how containers and just generally how shipping is done internationally. You've said before that was the only time that you and your partners agreed, or not necessarily formally agreed, but decided to invest in a company during that pitch meeting. What was so special about Ryan and or his pitch?
Yeah, it was, this was like almost 10 years ago. I think it was early 2014. And I still remember the conversation a bit. I think what stood out was Ryan had insane founder market fit, which basically means like he really knew the industry and the customer base. And the background is I think he was probably early 30s at the time, but he had been working in logistics and supply chain like companies for like 15 years. So literally, I think since high school. And he had started a couple with his brother. They had done well. So it was, there was kind of this feeling of like, he's an entrepreneur that's, he's built things that have been successful and gotten to meaningful scale. He knows this industry cold. He's like super passionate about the space. It was literally like, if you ask me like, who's the best founder in the world to build something like this, it's very hard to think of somebody with like a better set of qualifications. So that was one piece. I think the market itself was really exciting too, which was, freight forwarding. And I can explain freight forwarding in a second too, just in case your audience isn't familiar with it. But it's one of those markets where it's like $1 trillion market, but the largest companies have like a few percent market share. So it's like very fragmented. The companies are all like 30, 50, 100 years old. They're not very they're not kind of, tech native. They're kind of native to the previous generations. So I think there's a lot of opportunity to build something that was a more modern way of doing freight forwarding. And really briefly, what freight forwarding is, like, let's say you're shipping goods from like, China or Australia to the US, and you're a company like Fitbit or something, you want to ship a bunch of Fitbits over. There's a bunch of coordination and logistics involved, right? So you need like a truck to get your stuff to the port, something like a ship from port to port, a truck on the other side, insurance, like customs, all this stuff. And so there's different service providers for that. Flexport basically like manages that whole chain for you. It gives you a lot of transparency, makes, kind of helps you be a lot more efficient. So I think it's like a huge market. There's a lot of value in it. If you do a good job, goods move like more cheaply and more quickly around the world, which is great for everybody. And then I think, if I remember right, there's also a good why now here, which is, I believe until like a year or two before Flexport started, there was some law that I think it was something like freight forwarders had to be located in the port that they served. And so it was like, if you're freight forwarding, to LA, like you have to be based in LA. And so you can't go like, do the same thing in like Baton Rouge, Louisiana or whatever, or New Orleans or whatever, without putting up an office there and an office in every port you want to be in. And I think at some point around when Flexport started, that law changed so you could actually have like a real digital freight forwarder that didn't have to have a presence in every single port it operated in. And so I think that was like an interesting unlock as well for like a more digital company.
Yeah, definitely a huge market opportunity. And, he's been successful in unlocking some of that value and creating a really successful company. Are there any other pitches or decks that really stand out as super memorable? You've probably seen, 20,000 plus decks over 10 years.
Yeah. To be honest, I don't know if like a specific deck comes to mind. I would say maybe it's more of like a class of decks, which is I really like decks that, tell the story well. And they kind of have this, it's almost like watching a movie where there's like this narrative buildup. And by the end, you're like, this is like the obvious conclusion. And it's really satisfying. I think good pitches are kind of like that, right? Where, or maybe going from a different direction. I think a bad pitch is just sort of like a poorly assembled collection of facts, right? So I can be like, I'm an engineer and then I became an investor. And before that, I went to Caltech and I grew up in Russia. And it's just like a bunch of random facts, right? But I think if I phrase it differently, which is like, we immigrated here from Russia with nothing. Like I got really passionate about engineering. I went to school. I joined these startups. Like I learned a lot and I felt like startups are the best way to like impact the world. And, and that was like, and I felt like I wouldn't be a great operator, but I could be an investor that helps other operators. Like, it's almost like it's the same facts, but if I rearrange them, it's sort of just like a jumble of facts. But when it's a story, that's when like, I think like, by the end, people are like, oh, wow, like this is like, what a great background for, being an investor or a founder or building this company. And so I think the best pitches to me and the best pitch decks are kind of like that, where by the time you get through it, you're like, this feels inevitable. This is the right team. This is the right approach. Like, I can't wait to work with them.
Well, I've heard arguments both ways about pitching, whether to go in that kind of narrative arc of build up and the act in three parts, so to speak, versus some recommend that you start with, you start out of the gate with your main point, because if you don't, you're going to lose the attention of the investors, and you're never going to get there. So kind of working backwards. Any thoughts on that debate?
I would say, this is sort of like goes back to storytelling. Like, you don't want to bury the lead like too deeply, right? So like if there's something really exciting about your company, it's not a bad idea to like put that up front, just so like people are like, oh, okay, I want to listen to the story. But then I think it's still good to have a story, right?
At least tease it in the beginning and then get to it.
Yeah. And to your point, I would say like what I'm talking about is mostly seed stage too. Like at a Series C, like honestly, like if your business is strong, like you could probably have like a one slide deck that's just like, our revenue grew from 10 to 40 million last year. Like that's probably all you need. Like you don't need a story. It's just numbers, right? But at seed stage and pre-seed, like the earlier it is, the more you need that. And I think that's where like, again, you can highlight a few things up front, like, hey, my last company sold for 100 million and now I want to go bigger in the same space or something. Like that's a great, like one sentence intro, and then you can get into the story. But yeah, I don't think it's bad advice to like actually start with like kind of a strong element to get people hooked right away.
Yeah. Storytelling is so important, I think, at every stage, but certainly early on. Speaking of...
Actually, sorry, I did think of not a pitch, but one slide that was really memorable to me. This was, I think it was Robinhood Series B pitch deck. And so they had a graph of their member count. And so on the x-axis, it was time. And then they had this like hockey stick up into the right curve. And it looked really amazing. And then the next slide was they zoomed out to like a longer timeline, and that hockey stick was like a blip in the beginning, and it hockey sticked again. And it was sort of like, this was, the first graph was like progress to the A, and the second graph was progress between like the A and the B. And they the membership base grew so much that like all the like amazing growth they had up to the A still seemed like kind of a blip. And it was just a like visually striking, like memorable thing that it's like 7-8 years ago. And I still remember that one slide.
Yeah, the incredible growth. It reminds me of OpenAI. People were like, it reached 1 million users in 5 days. And then it was like, holy shit, it reached 100 million users in 2 months. So it's kind of like, it's not, it keeps going, that growth rate. So I was going to ask you about the evolution of founders and the skills needed at different stages, right? Being a founder for pre-seed stage, a lot of storytelling, a lot of vision, obviously building and scrappiness and all that. And then as the company evolves, you need to evolve, and some CEOs, CEO founders do better at that than others. What do you see as some of the key skills or traits needed for founders at each stage? And is that something that you can tell early on when you see a founder coming to you at pre-seed or seed? Do you have a way of judging? And maybe it changes your investment strategy or not, because founders can replace CEOs, or startups can replace CEOs later on as needed. But do you have a way to tell this individual is going to grow with the role and they're going to keep leading this to CD and eventually IPO? Or, this person's great at early stage, but they're probably not going to hack it once it gets to the next level.
Yeah, it's definitely something I think about a lot. It's a hard question because I think if I had like a very clear rubric for, okay, I know exactly how to predict like IPO quality founders versus ones that'll kind of maybe tap out at the seed or Series A, I'd be like the best investor of all time. But I think some of the common elements I've seen that are important is, I think one, you have to be resourceful, right? Because you're going to have a ton of different problems coming at you, and and limited resources, limited teams. So you're just going to have to figure out like, how do we overcome this obstacle or this hurdle with like a very little amount of resources and a very little amount of time, because time is often kind of like the biggest enemy of a startup. And then I think the other part is like being willing to handle discomfort, right? Which is like, let's say for me, right? I'm an engineer. I haven't done sales. If I was a CEO, I think one trap that somebody like me would fall into is like, I just want to write code and work on the product, and like, someone else will do sales. Like or, maybe I'll do sales like in a month, but not today, and keep putting it off and off. And then a year or two passes, the company's running out of money, and like we built this amazing product and haven't sold anything, and like we're not going to raise more money. And so I think there's an element of like being willing to say like, okay, I'm an A engineer and probably like a C salesperson, but like sales is really important, and like I just got to go do it, and like I got to do it well enough to, like kind of just face the discomfort of it and just try it and hopefully do well enough that I can get the first few sales. And then if it's working, like I'll go hire a salesperson. But right now we don't have the resources for that, and so I got to do it. And so I've seen that kind of discomfort tolerance is a big factor, where the people that just kind of want to work on the things they're comfortable with, the things that they know they're good at, they tend to kind of get stuck or become a bottleneck, right? Because there's a lot of other stuff that has to get done, and if it doesn't get done, the company just dies eventually.
Yep. What about coachability? Is that one of the key traits? And are there specific traits that you find yourself over-indexing for? Something that I recently realized, and I think I kind of knew this, but it became clear for me recently, that I over-index on trust above competence. And I think that's probably more true in a remote first world. Just curious if there's any traits that you find yourself that you over-index for.
Yeah, I think there's a couple that come to mind. One is I really like founders that are just like really exceptional at something. So I sort of pick somebody that's like an A++ at one thing and like a C and 5 others, and somebody that's like a B+ at everything. So I like people that like they're just like world-class at something or nearly world-class at something. I think one thing I really like is like thoughtfulness and intentionality. And specifically what I mean is like, I might say like, okay, like, your pricing is $20 per seat. Like, why is it $20? Why is it per seat instead of, annual contract or usage based or something else? And I always find it a little bit frustrating if somebody's like, well, like I just tried that and it worked, it's fine. So like, I'm just doing that. I like when people are like, well, like here's why it's per seat and not per, transaction or something else. And here's why it's 20 and not 10 and not 50. And so I like people where like maybe they've tried things experimentally, maybe they've thought through different approaches, but they're really like each decision sort of feels very deliberate and intentional versus, they just kind of threw something at the wall and like, hoped it sticks. And then maybe the last thing I'll say is I really like people that are self-aware, right? Because back to that founder that's like maybe an A+ in one thing and like a C in a couple other things, that's totally fine as long as they know like I'm an A+ here and a C here. And it's pretty dangerous if they think they're an A+ in everything. Because I think that's where like, maybe they won't let somebody else do the thing that they're not good at because they think they're good at it. And that's when the company stalls out.
Yeah, it's a good point, and a trap that I've seen with a lot of smart people, that they think that they're smart in all areas, and
yeah,
that's totally true. How can founders effectively navigate signal versus noise? Because they're getting a lot of feedback from users, from customers, mentors, advisors, investors, VCs, et cetera. How to separate what to listen to and to take into account and what to ignore or pass on?
It's a good question. I mean, I would say like just some high level heuristics. I think the more you know about an area, like the more skeptical you can be of advice, right? Which is like if you've never done sales and a couple of people give you sales tips, like maybe they're wrong, but they're probably more right than you would be if you just guessed. So like, maybe listen to their tips. If you've done sales for a while and a few people give you things that disagree, like you can think about them, maybe you can try them, but like you should defer to your own experience if your experience is really strong. I think that's one piece. I think another heuristic is like, you get a lot of conflicting opinions. You want to kind of see if there's patterns in what doesn't conflict, right? So maybe on your product, you get, 10 different pieces of feedback from every user, but there's like one consistent one, like, oh, this FAQ is confusing, or like there's no way to contact support. And it might be that you have all these complaints that come up like 1, 2, 3 times, and these two come up like 50 times. And so those are like, you should focus on those more. And then finally, I think the thing I would say is like, when it comes to like product feedback, or I'd listen to customers a lot more than anyone else, right? Because I'm an investor, but I'm kind of speculating. Like even you as a founder might be speculating of like what customers want, what customers like tell you they want, or maybe even more importantly, like what they show you they want through their usage and behavior. Like that's what you really want to listen to. And that I think that should carry a lot more weight than what an advisor or like an investor would say.
Yeah. And even customers, they may tell you what they want, but they don't know what they want. And you have to kind of tease out the why behind the ask, right?
Yeah. Or they tell you, but then their actions don't match their words, right?
Right.
So I think you want to look at actions if possible.
displayed preference versus
revealed
stated
versus
preference.
stated, right?
Yeah. They have the famous case study of, I think it was Match.com early on, where people would fill out this questionnaire and people would say, I prefer whatever, say brunettes, but they kept swiping on the images of blondes, and we're going to ignore what you answered and just follow what you did, right? You talked about pricing a minute ago in the example of thoughtfulness. You've recommended that startups be more proactive in thinking about pricing, especially early on. A lot of startups just kind of throw something up there and say, we'll test it later, we'll experiment with it later. Why do you think it's important to do deep thinking in pricing early on?
Yeah, I'd say this is like a topic I'm definitely passionate about, because I think what I like about it is pricing is very high leverage, right? Because if you're underpricing, you could probably triple your prices next month and just triple your revenue. There's very few other ways to triple your revenue in a month, right? So I think the leverage is there. And I think on the flip side, when I talk about intentionality, I think pricing is probably one of the areas I've seen where there's the least intentionality, where the most common thing is we're a developer tool, GitHub charges $10, so we charge $10. Or, I asked the first two people what they'd pay and I just charge them that. And I think that's where that's why you can often triple your revenue, because, if you had really researched pricing and priced well, there probably isn't a 3x gap of what you can do. But if you just kind of throw a dart and hope it lands well, often there's something a lot better around. So I think it's high leverage. I think it's a good way to test your business assumptions, right? Because your product has some costs involved in terms of maybe selling it, marketing it, maybe once it's in users' hands, there's some support, there's, onboarding, there's all this stuff. If the pricing doesn't cover those things, the business is not viable. And on the other hand, if it covers them by a huge margin, the business could be really viable, because now you have a lot of money to throw into customer acquisition, for example, or support. So I think pricing well is a good way to test okay, this thing cost me $1,000 to produce. I got to be able to sell it for $2,000. Otherwise, it's not going to be a good business. So try pricing it at $2,000 and see if you can sell it. And if you can't, maybe that means your business model is not validated, it's not going to work, or you need to tweak something. So I think those are two big reasons in my mind why pricing is important. And then the third one is very tactical, but when you price well and grow your revenue, it increases your runway, it gives you more optionality, it gives you more resources. So I think that's really valuable for startups as well.
Of course. And pricing has so much to do with business model, right? And the incentives that you create with your pricing structure. So if you choose to price, like you said, by seat versus by, metered usage or by license or whatever, it changes how people use the product and how they perceive the product. A lot of downstream effects there. You've talked before about startups being a series of de-risking exercises. What do you mean by that? Can you unpack that? And are there specific traps that startups fall into at the early stages?
Yeah, I think this is a model I've kind of realized over time, a mental model that I think is more appropriate for startups, where if you look at a public company, they're basically valued on traction and revenue and maybe a little bit of intangibles, but mostly it's okay, it's this much revenue, this margin, growing this fast, here's a price for it. I think for startups, it's less about traction, especially in the early days. It's almost more like a probabilistic model of here's your chance of being $1 billion company someday, right? And what you want to do to get a higher valuation is you just want to increase that chance, right? So if it's just hey, it's a good founder with an idea, maybe it's a 0.1% chance. And then if they, they built a product and you can see the product and you think it's going to be really compelling, maybe it's 0.5%. And so each of these things you do, ideally increases your odds of being a big success. And that's the thing that really matters, right? And so with that framework, I think the biggest mistake you can do is just basically to not de-risk the company. And basically make no progress. You feel like you're making progress, but you're not making progress in a way that actually increases your odds of success. And maybe one good analogy here is let's say you're a student at Stanford, right? And I'm trying to think of okay, what would your salary be, when you graduate? Finishing, going from freshman year to sophomore year to junior year, you're on an arc and the arc hasn't changed. And so that salary that you're going to get when you graduate isn't changing, even though you're making progress, right? You're adding an extra year of education every year and you're still going to Harvard, but your kind of expected value at graduating isn't changing. But if you get like an internship at, Google or something, right? Or if you you build your own like startup on the side, or you start a consulting service or whatever it is, those are the things where, hey, now there's like maybe your odds of like, making 2x the salary or like go up because you just did this thing that shows you have extra potential or like you learned something from it. And so I think startups are kind of the same. Like you don't want to, like, let's say your product is good. You can spend another 5 years making the product better. But if you haven't proven out, like you can sell it or some of these other risks, or like that you can grow the team or that you can beat your competitors, like you're not going to get a lot of credit for just like staying on the like, oh, I'm building the product and making it better trajectory. So sorry, I'm kind of long-winded here, but I think the gist is like the biggest mistake is people don't look at like what are the big risks here that investors and myself and like my teammates perceive, and then kind of knocking those risks off one by one. And instead they like, again, kind of go back to the discomfort. They focus on the thing that they're comfortable with or they're like working on. They keep making progress there, but the progress there is not valuable because there wasn't really like any more perceived risk there.
Yeah. And to paraphrase something that you've said on another podcast, the best bridge rounds, and it's topical because now everybody's rushing to try to get bridge rounds and it's almost impossible. But the best bridge rounds are where in order to get to the next milestone, you need to de-risk, let's say 3 things, and you've de-risked 2 of them, and you just need a little bit more to get to that 3rd thing, versus kind of like you spread it all around and didn't really make much progress in any meaningful way. And that's obviously not a great signal. I'm going to rewind. Go ahead.
One other analogy I've used a few times that I think is pretty accurate here is like, it's like a triathlon, right? So triathlon's like swim, bike, run. And if you're like a world-class cyclist and runner, but you can't swim, it doesn't matter how much faster you run, like by training, like you're not going to get credit for doing a better triathlon because you're just going to drown in the first phase, right? And so I think startups are like that. Like, you want to focus on things you're good at, but you want to cover your basis so that, you can actually show like, hey, I can do this whole thing. And then maybe like within the bike ride, there's like some area that's tough for me. Like, let me prove out I can do that. And that's where you get the most credit. And that's where you get like the valuation bumps and the big rounds and things like that.
Awesome. I love that. I'm going to actually put a link to that blog post. It's an oldie but a goodie that you wrote on this topic. So I'm going to put that in the show notes. Let's rewind the clock a bit. You were the 2nd engineering hire at LinkedIn, or non-founding engineering hire. What was it like working there at that time? This is 2003, I believe. Anything stand out in your memory from working with Reid Hoffman?
Yeah, I'd say like a lot of my lessons are maybe more from LinkedIn than Reid, because I was a junior engineer. He was like the CEO, so he was pretty busy, and I was fortunate to get some FaceTime with him, but mostly learned from the engineering team. But I'll say like a few of the lessons I learned from Reid specifically. I think the importance of like vision and ambition is really high for a startup, because I think that's the thing that gets the whole team excited and fired up. And I think that's also like like the further you shoot, like even if you miss, you're going to go far. Whereas I think if you have sort of like a less ambitious vision, like it's pretty easy to kind of reach it, and then you're like not really sure where to go from there. And one anecdote I have about this is, I actually remember when I interviewed with the engineering team while I was still in college, and LinkedIn hadn't launched yet. And at the end of the interview, the engineers were like, "Hey, do you want to chat with our CEO Reid for like 10 minutes, just to like, so you could meet him, he could ask you some questions." And I remember, I talked to Reid for a few minutes. He seemed really smart. At the end, he was like, "Do you have any questions for me?" And like I was, like a 21-year-old or something. I didn't really know what to ask, but I was like, "Well, like I don't, this like social networking thing is kind of this new idea. How big do you think something like this could be?" And right away he was like, "Oh, I think it'd be like every white collar worker in the world, like hundreds of millions of people." And to me, that like it seemed really crazy, because back then I don't even know if like Yahoo had hundreds of millions of users. And so the fact that this like niche unlaunched like social network, when social network wasn't really a thing, would claim to be of that size or bigger was just like wild to me. But like I remember just thinking like, oh, like let's, it kind of got my mind spinning of like, well, like what if it could get there? Or, like how could it get there? Or like what would be the value of that? And so I think like just like that level of ambition was really infectious. And I remember even later, like, 6 months, a year into when I was working there, every month or two, we would give these kind of like company-wide pep talks. And I remember there was one he talked about where he said like, one of his visions in the short term was LinkedIn would be like resume 2.0. Or back then, like you'd email PDF copies of your resume to everybody and they'd kind of go stale. And he was like, well, what if you had like a public resume and someday you just email somebody a link to your LinkedIn profile? And, that was, again, one of those kind of mind-blowing things. You're like, well, wait, like everyone like emails their resume like PDFs. like, wouldn't this, like, that would be really cool, but this seems so far away. But then over time, like, you see the company kind of inch there and inch there and inch there more and more. And then now it's like, it is like your new resume, right? Like, I don't remember the last time I've got like a PDF resume. Um, and it has also like way surpassed that 200, 300 million users mark. And I think if the ambition had been less, I think the team would have been less excited. I think the company probably would have, tapped out a little bit sooner. That was like one really memorable lesson for me.
That's really cool. Did he have the vision for like a full-blown social network with the content and all that, or was it like you described, kind of a bulletin board for resumes?
It was. I think the content piece came later. I think maybe, if I remember right, it was after I left, but I think it was maybe around when like Facebook launched its news feed, maybe like 2007 or 8 or something like that. And I think that format became widely adopted across a lot of social networks. In the early days, it was more about like kind of one resume database, like public resume database, and a place to host like your resume. And then 2, a way to basically like engage in business transactions through your network, right? So like you could apply to a job through a friend of a friend. You could try to strike like a business partnership through a friend of a friend, where basically like the goal of LinkedIn was to show you like not just who you know, but like who do they know and who do they know, and like who can you kind of reach through like your close connections. And so the goal was much more like transactional versus content oriented.
Very cool. Leo, I am enjoying this so much and I can keep going, but we are out of time and moving on to our exciting lightning round.
Ooh, sweet.
Can you recommend a book, podcast, and newsletter?
That's a good one. So for newsletter, I like Lenny Rachitsky's newsletter on product a lot. I think he covers a lot of like great topics there, and he also has a lot of guest posts on things like pricing and other subjects. So that's one I like a lot. For podcasts, I would say I actually don't have a good rec here. I have a bunch of good investor podcasts I like. But what I probably learned the most from is like when I find a podcast guest that I like, I'll try to find other podcasts they've been on. So for me, it's less like, oh, here's a podcast and I try to listen to every episode. It's more like, I listened to, I don't know, Lenny Rachitsky, for example, on a podcast, and he was really smart. What are all the other podcasts he's been on? Let me listen to those. And so I find that to be like a good learning mechanism, where like if somebody's got interesting things to say, like let me find all the things they've said. And then for books, I would say like 7 Powers is one I like a lot. It's a book that came out a few years ago that talks about defensibility and moats. I think in the AI era, like that's more important than ever to think about, because you don't want to build something and then have it grow for a year or 2 and then just get disrupted by a copycat or a dozen copycats or kind of the next generation of things. So I think that's a good like kind of 150, 200 page book that, that'll get you thinking about like, not the 1-year vision or the 2-year plan, but like, the 10-year vision, and like, how do you get there and how do you ensure that you survive and thrive the whole time?
So welcome to all the Leo stands who've followed you over to my podcast, and hope you stay for other episodes. Thank you for those recommendations. Do you have go-to questions when it comes to hiring and or when it comes to meeting founders for the first time?
You mean hiring for SUSE?
Yeah.
We actually haven't hired that much. The interesting things about venture funds is like they do scale, but much, much slower than startups. So when we started, we were 4 partners, and now we're a decade in, and I think the team's like 12 people. So it's grown, but it's grown pretty slowly.
Fair enough.
I would say like, I think on the hiring side, the 2 things I'm usually most curious about is like, why is somebody interested in venture? Like, why are they excited and passionate about it? And then 2 is like, what are kind of their unique either points of view or, ideas where, founders have so many investors to pick from. Like, is there a reason they would pick this person to work with if they had, offers from 5 other good investors? So like trying to dig into that is probably like the thing I try to do most when I'm talking to somebody that we're thinking about hiring. I'm trying to remember what the second part of the question was. Sorry.
Is there a specific question that you ask all founders and that you index off of?
I don't know if there's a question I ask all founders, because I do think it varies a lot, but I think origin story is really interesting to me, because I think that's where you can suss out why somebody excited about something. Are they, do they have the right background to like, or like the ideal background to build it? Back to the topic of pricing and intentionality, I like asking about pricing just to understand like how somebody's thinking about it, how much they've thought about it, what else have they considered? Because I think it's almost like, It's almost like a brown M&M test, if you're familiar with that.
Sure. That was the rock and roll. I'm trying to remember who that was.
I think it was Van Halen.
Yeah.
Yeah, where they had this like 50-page instruction manual for what you had, like people had to do to prepare for their shows, like to construct their like stage and stuff. And one of the instructions was like bowl of M&Ms with no brown M&Ms in it. And it's not that they didn't like brown M&Ms. It's more like that was their litmus test of like if they came to the show and there was a bowl of M&Ms and there were brown M&Ms in it, they knew that if that instruction was not followed, maybe some of the really critical ones around like how the stage was, set up and how like special effects were set up were not followed. And so I think to me, like, pricing or something like that is like drilling into it is like a good litmus test of like, how much the person has thought about this might be an indicator of how much they thought about other things.
Yeah, great point. Last question. I'm going to be interviewing April Underwood tomorrow, actually. And she used to be you probably know her, the founder, not founder. She used to be the chief product officer at Slack, and she's now turned to investing. What's a question that I should ask her or a piece of advice that you'd have for her?
I actually don't know April Underwood. I know her by name, but I don't know her. So I don't know if I have a good answer here.
Okay. Scratch that from the record then.
Sorry.
All good. Last question, Leo. What's the proudest moment of your career so far?
My career. That's a big one. Okay, so like at the last company I was at before SUSE, it was a company called Factual. We built like APIs for getting location data to companies. So if you wanted to build like a Yelp competitor or like a Foursquare competitor, you could use our data. And the very first contract we were ever shooting for was like Facebook gave us a really tight deadline for giving them location data for businesses across, I think, like 15 or 20 countries. It was like 15, 20 countries, lots of different languages, like, lots of complexities to building a data set like that. And then we're also doing it for a company that's like has infinite resources, can do it themselves if they're not happy with our solution, et cetera. So it was like a very tight deadline, high pressure project. And I remember me and some of the other engineers at Factual basically like slept under our desks for a while. It was like just like a very intense period. But we basically like pulled through kind of like right in the nick of time, and that ended up being our first contract at Factual. That was like a very meaningful contract and really set the company on that direction. And so I think just kind of like banding together with the rest of the team and like finishing that project and making it good enough for like Facebook to be happy with it. That was probably like one of the highlights of my career, at least as an engineer.
Super cool. And that's one of those go-to litmus tests for interviewing is you ask like about a difficult problem, and if somebody really solve that problem, they'll know all the details of it and they'll remember it, right?
Mm-hmm. Yep.
Thank you so much for your time and your insights. You've had such an amazing career and continue to be a force for good in the startup world. So thank you for joining us today. Any final words of advice, and how can people reach you if they want to continue the conversation?
Final word of advice is I think podcasts like this are great because you get to learn from a lot of people. And I don't know everything, and I actually don't know most things, but I think you've had a lot of great guests here, and I think people should keep listening to your podcast. And if they want to reach me, I'm on Twitter, L Polovets on Twitter. I'm also Leo at susaventures.com if anybody wants to email me.
Awesome. All those links will be in the show notes. Thank you, Leo, and stay in touch. Wishing you all the best.
Thanks so much for having me. This is a blast.
Bye.